Hi everyone, Donna here, I'm the owner here at Bookkeeping Made Simple. Today I'm recording from a secret location, an undisclosed location. No, I'm actually in a hotel in Mesquite, Nevada, which is a little two-stoplight town. There's not a whole lot here, but it was kind of nice to get out, away from home for a little bit. One of the nice things about my job is I can do it from anywhere. So why I have everything set up the way I do is that as long as I have an internet connection, I can work. So I want to really quick, I want to talk about when is an expense not an expense? And we are going to discuss how you can create expenses without spending money, how you can spread some of your expenses over time. And we're going to talk about depreciation and liabilities and assets. Before I really get started, I'm going to ask you to, if you enjoy these videos, please like, share, and subscribe. This is about my third time redoing this video. It's been really interesting. Please like, share, and subscribe. It helps me to grow my channel. I'm trying to make sure that these videos are useful and thoughtful and maybe even a little bit entertaining too. I know a lot of people think accounting it's dull and boring. I have not necessarily found that to be the case. But then again, I've always liked numbers. So if you are interested in having us do your accounting for you, please reach out to us. Our number is 801-692-0032. Dr. Harley, she's answering the phone today. We are very interested in helping you and have a lot to offer. So please feel free to reach out. So when is an expense not an expense? When can you show an expense on your profit and loss and not spend money? When can you be underwater in your business and still have a solid cash flow? And when can you show a profit in your business and still not be doing well? These are all scenarios I've actually had clients bring up to me. And that's one of the reasons why I like to discuss this is I have had clients just, say, it's just an unnecessary expense to have an accountant. It's the most important expense other than advertising that you can run. What's always interesting about that is they're doing things like spending a lot of money on truly unnecessary expenses. And then they're saying, oh, we don't need an accountant. We don't need to spend money on advertising. And I'm like, you kind of do. But we'll go into that later. So the magic is in the balance sheet. I'm going to use a really common scenario, and it'll be very familiar. And we're going to talk about how sometimes what people think is an expense is not, and sometimes what they don't realize is an expense is. Okay. So it's really a hot issue. We've been trying to get several clients' tax burdens reduced. And in order to do that, we have to show every possible deduction. The tax law allows for it. We want to use it, and we want to make sure that you use everything you possibly can that's legal to pay as little as possible in taxes. So most people look at the profit and loss. They see the top line is their revenue, and then maybe in the middle, they may have a few cost of goods. There's usually not a whole lot there. I don't do a lot of manufacturing clients, so I don't have to worry about work in process and things like that. And then they have their expenses. And then at the bottom, what we call the bottom line, and that's really where they look. They just want to see what the bottom line is. And so they take that as the gospel truth. That's not necessarily the case. Accounting is more complicated than that, to be honest. But I'm going to use a really common scenario. I want to try to explain this a little bit better. So what we're doing is, let's say that a building contractor goes out and he needs a new truck for his business. So he goes out and he buys a truck. And let's say that The cost basis of his truck is $100,000. Cost basis, by the way, is accountant speak for purchase price. Okay. We want to know what the basis is. In other words, how much money do you have tied up in this? So that's his purchase price. That's his cost basis. He pays $100,000. I'm using $100,000 for easy math, just to make it simple, because there's no point in saying $47,982.52. We're not worried about that. I just want easy math. So he takes out a loan to pay for his truck. Real common. And he takes out a loan for the full price of the truck, $100,000. Later, I'm probably going to talk about amortization of loans, but right now I just want to point out that the interest on most loans is kind of front loaded. So you pay interest, you pay most of the interest on your loan very early in the loan. It's not a static number, it's dynamic. So we use things called amortization tables, and I'm not really going to get into that a lot, but I will just, just to point out that as you pay off more and more of your loan, you're paying less in interest and more in principal. So the closer you get to the end, it kind of goes up exponentially, and you pay off your loan quicker at the end of the loan. Now, notice I'm talking about a loan and a truck. So I'm talking about a liability and an asset. I haven't said anything about expenses. Okay. Now, Mr. Contractor's making payments on his loan. He thinks, as most people do, that the payment is an expense. It's an automobile expense. In fact, he may be reluctant to give us the loan paperwork so that we can actually put this information into his books correctly. The problem is payments on a loan that you took out to purchase a vehicle is not an expense. It's not. It is payments on a liability. We're simply moving something from, we're going to reduce your cash asset and we're going to reduce your liability. That's it. Okay. So there's not a whole lot of changes that's going on. Now you feel it because you see money going out, right? And so you think money's going out. I'm creating an expense. Well, the interest on the loan is an expense. We do want to make sure we capture that. But the fact of a payment does not mean that there's an expense here. But then again, he's got an asset. That's why he incurred the liability, was to obtain an asset. So we're going to take this asset, we're going to take this $100,000 truck, and we're going to assume that he's going to use it for a specific length of time, let's say 5 years. And we're going to account for the fact that over the next 5 years, the value of this truck is going to drop. Okay. Buildings are 30 years. Land, by the way, land is the only thing that never depreciates. So that's why we will say we need to know how much you paid for the land and how much you paid for the buildings. But land never depreciates. It is the only thing that never depreciates. Buildings will depreciate. We'll depreciate those over 30 years. But I always like to look for anything that's a depreciable asset, because I want to make sure that that expense, there's the word, gets accounted for. So we are going to take that truck, that $100,000 cash cost basis in accounting speak, purchase price, and we're going to split it up into a certain number of years, let's say 5 years. We're going to do our voodoo on it. There's like 5 different ways to depreciate. There's the one you're going to hear about the most is probably makers, which is the one the IRS uses. They require us to use it. It is not the one you're going to see in your books. If you look in your books, then you are going to see probably straight line depreciation. But there's a several different things we can do to show the loss in the value of the asset over time. But the IRS does require us to use makers, which is just theirs. They can do that in their software. So if we want to maximize that for you, so we're actually going to create a monthly depreciation expense. We're going to create a way to increase accumulated depreciation and increase your depreciation expense. That's going to show up on your profit and loss. So you may look at your profit and loss and say, oh my gosh, I'm losing money in my business. And it may be a lot of depreciation. You may also look at your profit and loss and say, my business is not worth much. You may look at it and you may think, I'm in profit. Why am I upside down in my bank account? Okay. A lot of that has to do with cash flow. Cash flow is an entirely different creature. Like I said, a lot of people think that payments on a loan are expenses. They're not. They're just transfers from assets to liabilities. So you reduce your assets, you reduce your liabilities by the same amount. And you may not create an expense there. But we do need to look at your cash flows, and that's really the most critical report for small business owners. They think it's a profit and loss. It's not. Profit and loss is something to hand to a lender. It is important. It's important to see what your profits are. It's important to look and see what your expenses are. And it's important to understand some of those expenses are going to not be cash expenses. Some of them are going to be depreciation or amortization, excuse me, not amortization. There's another one. Depletion, possibly, because you use up resources. And those things, depletion and depreciation, show that you're using up the resources. And we will we'll need to look at the balance sheet and see what assets you have. If you have a lot of assets and not a lot of liabilities, you're going to have a lot of equity. That's just the accounting equation. That's just how it works. If you have a lot of liabilities and not a lot of assets, you're going to be upside down in your equity. Regardless. So we look at all of these things, and then we look at the cash flow report, and we start to see really where's the money to run your business coming from. And I kind of keep coming back to this. I had a client once that was, I really liked them. They were really sweet, but they kept borrowing money to cover operating expenses. And 99.9997% of the time, I say that's a terrible, terrible, terrible idea. Don't do that. He was doing that. He was not spending money where he needed to spend money, and he was spending money where it really wasn't necessary. So he was not spending money on personnel. He was not spending, most important, at least in my mind, the most important things you can spend money on as a business owner is payroll. Even then, you want to keep a very, very close, tight eye on that. You want to pay for your people. You want to pay them well, because that's your business. They're the ones that are doing the work. They're the ones that are helping you make money. You need to pay your people well. Advertising is another one, because that's how you get revenue in the door, especially in today's climate. You can't count on foot traffic. You can't count on word of mouth. Word of mouth is great, and I like it. I love it when I get referrals. I do pay referral fees, but it's a little bit tricky. You've got to get your name out there. The third thing is your accountant. You need to have a good accountant. The accountant's going to be looking at your books. Sometimes they can double as a bookkeeper. Sometimes they have bookkeepers on staff. They're going to be looking at your books. They're going to be analyzing them. And then they're going to be counseling you on what to do next. How can you save money? And sometimes you save money by spending money. They're going to look at your cash flows. So if you're upside down in your business in any way, if you feel like you're struggling, if you don't know why your bank account's not going up, you need to talk to your accountant. We are more than happy to help you with that. We would love to take a look at your books. And the first thing we need to know about your books is that they are clean. And if you're a small business owner and you do not have someone with years of experience and or a degree doing your books, I used to say that a degree wasn't necessary, and it's not. But now that I have one, I have really seen how much I didn't know over the past 3 years since I've worked on it. And so I'm working on an MBA, hopefully starting in June. And I may go ahead and do the master's in accounting as well, because I'm seeing I didn't know what I didn't know. And there's a lot to all of this. So you need to have someone that knows what they're doing in your books. That's where we come in. We can come in and we can take care of your books. We can make sure everything's correct. We can make sure the things are posted to the correct accounts. And that has been a real challenge for a lot of our clients. I've seen multiple clients just take whatever QuickBooks tells them. You download your bank transactions into QuickBooks. QuickBooks will sometimes assign an account to that or suggest an account for that. And many times that's wrong. So we want to make sure that we get all of that correct. We want to make sure that that's easy to understand. We do the research, we do the heavy lifting on all of this, and then we will consult with you and discuss what comes next. How do you pay for this? How do you increase your bottom line? How do you obtain more assets? You want more assets. You want to be able to depreciate them. So you want depreciable assets. Except for land. You always want, I love real estate. Land's always a good thing, but you want a depreciable asset. You want to have all of the tools that you need to run your business effectively. And you need to understand that depreciation is a real expense. And you accrue that by buying the things that you need for your business. So I would look at your profit and loss. I would look at your balance sheet, and I'd look at your statement of cash flows, and I would do some analysis on that, and then talk to my clients about, you need to buy more. You need to buy more assets. And talk about where they want to go in their business and what they can do to reduce their tax burden, what they should be planning on for a tax burden based on what I'm seeing, and how to get all that taken care of. So please feel free to give us a call. Our number here is 801-692-0032. I will put it in the description below. And our website is mysimplebookkeeping.com. Hopefully in the next couple of weeks, I will be back to my regular webcam and not this horrible blank canvas of a wall back here. I feel like I'm doing a kidnapping video. We will talk to you again soon.